There's no right way to draw a trend line. Some people use bodies, others use wicks, so on and so forth. The trend line, obviously, we know retail traders see a trending market where they look to get in on the retest of trend lines for continuations. If you are in a bullish market, where are you going to be looking to buy your trend line? You'd be looking to buy on a wick rejection of your trend line to then go higher, right? You're looking here to buy. If you're looking to sell for a trend line, right, if you're in a bearish trend, you're obviously going to be looking to take your position off of the next trend line mitigation or the next trend line retest. On the opposite end, if you're looking to use a trend line not for a trending market, but for a counter trend, retail traders do what? They wait for the break of the neckline of the trend line, wait for the break of it, and then what do? They look to buy on the retest to then go higher. That's what trend line traders do. They're either going to take their position on the trend line to continue the market trend, or they're going to wait for the trend line to be broken, buy on the retest, then go higher. So that's what they're looking for, either continuing or they're getting in reversals. Retail traders use it because, again, like support, resistance, anything, the more touches that it has in a trending market, the more intent appearing so it has to continue doing that way. Again, they're either on the retest on the trend line or on the break of it. What market conditions does this occur in? It occurs in trending markets, higher highs and higher lows, lower highs and lower lows. Again, you're learning all of these, not because you're always going to be consciously aware of them. You should always be aware of them. But what you're going to be learning is where one thing tells you where everything loses. Right? Boom. So now, millions of traders identify trend lines as logical areas. It's the most utilized and manipulated retail tool. Everyone learns about it when they first start trading, right? How do you draw a perfect trend line? Perfect trend line, it doesn't exist, right? There's no right way to do it. So the purpose is to trap traders on the retest of the trend line and trap retail traders on the break of the trend line on the retest. So trend lines are heavily manipulated because when a trend line is broken like this, we know that those who are selling here have their stop loss above the trend line. They're losing. Those who see the trend line broken very drastically, they're looking to buy on the retest of the trend line to then go higher. So both of these types of traders are going to be losing. Even over here, when you see a trend line, the trend line is broken, but then price continues the opposite direction. So what is that from the liquidity perspective, right? So from a liquidity perspective, we know that identifying the order block lying after the trend line that causes it to be broken, this is the order block that we want to focus on. What we do to draw our trend lines, right? Because some people do not know this, but when you're connecting your trend line, you're not doing this. If you're in an uptrend, you're not connecting the higher highs. You are only connecting the higher lows in an uptrend for your trend line. If you're selling, right? If you're selling, you're not marking this. You're marking the lower highs that are making your lower lows. So what do? Right? We know that trend lines have to be broken, and there's specific reasons trend lines see this, or trend line traders see it doesn't work. What happens is when you see a trend line, we need to expect two different setups to happen for a trend line. Two different setups. We need to expect one, that the trend line is going to be broken, and then it's going to go higher. So we want to identify the order block that resides below the trend line, right? So we identify the order block below a trend line to go higher. And if we're looking for sells, we want to identify the order block right after the trend line to then go lower. So these two setups are trend line one. These are the trend line one setups. So draw both of those, and there's another type of trend line setup we look for. 10 more seconds, draw those two trend lines, and then draw the other setup. We get right to it. 5, 4, 3, 2, 1. Great. The other trend line setup is this. Instead of just coming slightly past the trend line, what can happen is price will come to 1, 2. It'll take out two previous highs to then come to the first instance that actually started that trend line. So remember, for trend lines, price will either come to take out that first or that last area on the trend line to then go lower, or very important, or it will come back to the first high that started the trend line. Come back in here to that first high. So it's either this is going to happen, or it's just going to come right here. So in this example, this would be your decisional, this would be your extreme. So both of these examples, you can see this first one, trend line was broken to come back to our first high. Second example, the trend line was broken to come back to where price first started the trend line, like in this instance. And just flip the drawing, inverse it, draw the sells, and you come back and draw the buys. All right, type 1 in your chart, ready to go, so we can keep flying through this. Again, you're not going to be able to write everything down. It's the point of the boot camp. You're going to have everything afterwards. All right, awesome. Love it. Boom, right? So the reason I keep pausing the screen is because, again, format was messed up slightly, just to make sure. Cool. All right. So let's say that this is where we are right now. In this instance, let's identify the most recent trend. Where are we going? Are we going up or are we going down? Which one does it look like? What's the trend? Right, so we have some conflict here. We were previously going down, but now we're going up. So what we're going to do is we're just going to say, for the sake of argument and sake of time, we can see that now we're going up. We were going down, but there's a key point here. Trend line, it was broken all the way over here, right? Order blocks have already been mitigated. So that tells us if we were going down, well, the only other area for us to sell from would be a little higher. So let's think about the buys, right? So for the buys, everyone draw the trend line for the buys exactly as it should appear. So with that being said, if that is the trend line, as you guys have now all identified, if that's the trend line right here, where is the order block? Where's the order block if this is the trend line? Remember the setups we talked about, right? Remember the setups. Remember, if there's no imbalance, there's no order block too. You guys are wrong, right? So if we're thinking about it in terms of pushes, right, we have 1 low, pull back, 2 lows, pull back, 3, 4. This is where price currently is. Where's the first place we should always look to buy based off trend line liquidity? we should always expect this first low to be broken, right? Again, if there's no imbalance, there's no trend line, so where there's no order block, I wouldn't emphasize it. Here, we always expect the first low to be broken. Is there an order block to the left that remains unmitigated? Yes, there is one right here. So this would be our first order block, right? The next one would be where? Well, this, we have 1, 2, 3. We want to identify the order block that actually started, right, this first push. Where's the imbalance? There's no imbalance, there's no imbalance, no imbalance, boom. We do have a small imbalance here. So this pink box is then our next order block. So price will either do this, or it'll come down here, then go higher. Only one or the other, one of the two things. Systematic approach. If it's this, do not look here. If it's here, look there, right? So take out the first touch or the last touch. Of course, you can see here, mitigated, price then runs away, right? And that's all that you would anticipate. Very straightforward. You can anticipate this, just trying to get all this ready. All right, so now what I want you guys to do is the exact same on this, and then we're going to keep flying through. Identify the trend in this scenario. After identify the trend, draw the trend line as it appears for touches. Boom, 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 right? We have several different trend lines in this case. So our trend line, right? Let's say that, thank you. I'm going to go, let's keep the ads running. Let's stop it, right? But this is our trend line right here, right? Price already broke the trend line, but there's still an anticipated move that we're looking for. So based off of those trend line setups we talked about, where are we going to be looking to sell? Where's our order block? Because you see, there's a lot of different ones. You have to use the process of elimination in conjunction with the specific setups we look for. So let's see, we have a high, we have a low, first touch. We have our high, low, second touch here. So we know that this is where price must come back to at the minimum. At the maximum, right, it's either going to take out the first touch or it's going to come all the way up here. So someone who had illustrated 1 and 2 is absolutely correct. Nothing in here is valid, right? Nothing in there is going to be valid. So we need to look for the order blocks. Nothing above here. This is all equal high, break and retest liquidity, correct? Correct. So now where are the order blocks? Where's the first order block that's above here, right? Well, we have a couple different ones. Do we choose this one? Do we choose this one? Do we choose this one? In this case, they tie in more types of liquidity, right? We can be able to think about it. But we know we have some form of order block in here. We're going to have something over here. So let's see what price does. Here's our trend line. The first order block right here after the trend line was taken out. Always the first one, right? And price after the fact will do exactly as we anticipate. Come up, take out all of these equal highs right over here. Take out all of these equal highs that are now formed into the immediate order block above, and then taking out the gas, looking to sell, taking out gas above our equal highs, our trend line, trying multiple types of liquidity, and then collecting the gas to then go to our destination as we already have so many equal lows. Very straightforward, but again, when you identify these order blocks, it can get confusing. You should only ever have 2 order blocks at the absolute maximum. If you're saying order block, order block, order block, order block, order block, that's not SMC, that's gambling. That's not a logical approach. Or that's, I mean, yeah, that is SMC when you're doing so many order blocks, right? But this is how you need to start approaching it. Great. So now the